Correct. Vineet Nair, Chairman of Mahindra and Mahindra Satyam, and Executive Vice Chairman of Tech Mahindra, joins us live from New Delhi to talk about the merger and the impact of Indian rupee on Indian IT industry. Mr. Nair, good morning. Thank you for joining us. What do you want to start with, sir? Impact of rupee, or on when the merger will happen between Mahindra Satyam and Tech Mahindra?
Nikunj, it's your call, but let's get the procedural matter out of the way and let's talk about what is left about the merger. As I see it, now that the High Court has approved it, we would now be required to file the necessary papers with ROC in Hyderabad. ROC in Hyderabad at that time will do all the procedural work, including the deleting the name of Satyam from its register, and thereafter it will go to the ROC of Maharashtra in Bombay, and where they will incorporate the two companies as one. And I presume this should take about 6 to 8 weeks. But please remember that the merger, when it takes place, will be effective from June 1, 2012. Or June 1 or April 1, I forget the...
Right. So, Mr. Nair, at a time when we are not counting months, we are counting week. What is the biggest risk still? Because you never say never in this market.
I don't see any risk in the act of merger as such. The reason is pretty straightforward. We have been operating as one company. We will continue to operate as one company. So there is no risk. There are a few advantages because now we will be seen as one company, and it will be easier for clients of telecom, of Tech Mahindra, to take enterprise services from Satyam, which will now be part of Tech Mahindra, and vice versa. So there are only marginal advantages, but otherwise we have been operating as one company de facto for the last 2 years.
So Mr. Nair, do you then foresee further improvement in margins now that the combined entity stands at about $2.6 billion? How much growth can we expect since it's now the 5th largest IT company?
I think there will be, in the long run, some benefits of the size of the company. But growth at a large base is also a larger challenge. As the old saying goes, happiness is starting from a low base. Now we don't have that facility anymore.
Right, but analysts have been pegging your earnings growth at about 15% over the next 2 years. Is that achievable?
Difficult. You know, we don't give any guidance on this subject, but certainly this is part of our objectives.
Right, along with your
growth of this magnitude.
Right, Mr. Nair, along with your numbers, the management of Tech Mahindra and Mahindra Satyam had indicated that they are hungry. They are hungry for inorganic growth. So, are you close to something? Are you negotiating something big with in Europe or in US?
Well, I mean, I don't know whether the word hungry can be used, but we see this time period as time for consolidation. There are a lot of small or medium-sized enterprises which are now looking for homes and looking for the benefit of being with a larger company. So I think if such consolidation opportunity appears, we will certainly take it. But as I've always said, our acquisitions have to be strategic in nature. They will not be only for bulking. So if they bring something to the table in terms of competency, in terms of a particular vertical, or augments our vertical which we want to chase, grow more rapidly, we will certainly look at it.
Mr. Nair, channel checks as well have been showing that, clients were also waiting for this approval to come by before spending with Satyam. Do you see customers having more comfort with the company now?
Yes, I think so, because whether we like it or not, and I love it, the word Mahindra conjures a level of integrity and a level of performance which is relatively high, and that does give us a huge advantage. And I think our performance so far has indicated that there is an integrity in purpose insofar as our deliveries are concerned.
What about the deal pipeline, though? Do you see signs of demand picking up, especially when it comes to discretionary spend?
Quite a few things are happening, and differently in different regions. Discretionary spend in the US is going up. Europe, which is having large financial and economic challenges, the barriers are coming down, and they are looking more and more for external help in terms of services, which was earlier shut out to companies like ours. So I think Europe, we could see even larger action than we are seeing in the US. Though Europe will be not on discretionary spend, but replacing their vendors by vendors from India or other countries which are more cost effective.
I'm going to ask you a difficult...
Asia, yes, go on.
But
I was just going to add, sorry, there was an echo on the line. Go ahead, sir.
No, please go ahead. Why don't you complete your point?
Yeah, Asia and Pacific region, especially ANZ, Australia, New Zealand, there you're going to see a much greater increase in discretionary spend, but its overall impact will not be that high because the proportion of their spend in relation to US and Europe is somewhat lower. Africa also is looking very, very good. And we are, that's an area of growth we are seriously looking at.
I'm going to ask you a difficult one now. Are you looking at acquiring the Polaris service unit, or that is an absolute no-no?
I beg your pardon, I didn't quite get it.
Are you looking at acquiring the Polaris service unit, or that is an absolute no-no?
At this moment, yes, it's a no-no.
What will be the impact of rupee on your how will rupee impact your quarterly performance? My understanding is that if rupee depreciates by about 1%, that will benefit your margins by about 30 to 40 bips.
I think in the short run, as you said in your show earlier, IT companies will benefit. But in the long run, I'm not certain, because ultimately rupee falling so precipitously is not good for the country, and what's not good for the country will ultimately cascade into the IT industry also.
Mr. Nair, market men are also hoping for Tech Mahindra's inclusion in the indices. That's the Nifty. Do you see that as a possibility anywhere in the near term?
I am not aware of the precise considerations which Nifty has in mind for including a company or not including a company. Therefore, I really can't give you any idea on this subject. It will have to depend on what Nifty, the considerations Nifty takes into account.
But typically, what are your what is the sense you're picking up from some of your customers? Because if rupee has depreciated the way it has depreciated, are clients renegotiating rates, or are they ready to leave that extra money on the table for an IT company like Tech Mahindra?
It will depend, but I will tell you that when fresh negotiations come, they do raise this issue. That look, your rupee has depreciated, but ultimately when rupee depreciates, inflation grows. Inflation increase cost in skills, the costs of external costs, which are about 50%, always remain the same. So the impact is not as dramatic as it is sometimes made out to be, and that is the considerations we put before our clients. So I have really not seen clients pushing hard to lower the rates merely because the currency has depreciated.
But in the short term, are IT companies in a sweet spot? Because US economy has recovered, wage bill is unlikely to go up, currency is supportive, and the deal pipeline is looking strong.
Yes, I think, again, as I said, in the short term, it is looking better than it was earlier. But I do worry about this instability of currency because it's not good for anyone, even though in the short term we may get some measure of benefit.
Now, formally you don't give a guidance. So we often try to judge here, we try to read in between lines. Correct me if my interpretation is wrong, but I'm getting a sense from you today that FY14 will be a much better year than FY13.
I can, as the old saying goes, neither confirm nor deny.
But I'm simply trying to read in between lines.
No, I was giving you an idea of what is happening around, and I think everyone has a right to conclusions.